Hey guys, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be going over the YieldMax Group D distributions for the month of October. I'm going to talk about how much I got paid with my Group D funds, and then I'm going to discuss the weekly pairs for YieldMax and for Roundhill. Let's get started. If you guys are new to the channel, usually the first thing I like to show is my account value on the screen. Currently it's at $108,056. When I first started this project, it was at $102,000, but I also pulled out about $25,000 in cash to pay back some of my heloc loan. Just to understand the objective of this project is I took out a heloc loan against a rental property, threw that money into Robinhood, borrowed against it to make about $140,000. And then I've been investing in these high income ETFs, high income yield ETFs. So just to kind of get that out of the way. But now let's start looking at the different distributions. All right, guys. So for this week's Roundhill distributions for XTTE, we have 23 cents, almost 24 cents. qdte at about 20 cents, and then rdte at 33 cents. Now let's go over to the YieldMax distributions. All right, so for the YieldMax distributions, we have YMAG leading the way at about 22 cents. YMAG at an abysmal 5 cents a share. This is actually kind of embarrassing. I'm going to be honest. It is what it is. Now let's talk about the Group D pair. So MSCI, absolute monster at 4.2 almost. YQQQ, 35 cents. Amzy, which I'm invested in, is about 76 cents. Aptly, 34 cents. AIYY, 72 cents. Basically Disney, 51 cents. SQY, $1.02. And then one of the newer funds, smcy, is at $5.34 or 35 cents. That's absolutely wild. So let's dive into the weekly performance and then the yearly performance. And then I'm also going to discuss the average yield since the inception of the fund to kind of get an idea of what's actually a good investment versus not a good investment. Let's look at the weekly performance of XTTE. This is one of my favorite Roundhill distribution funds. And so for the last 5 days, it's been down about 1%, but this is in line with how the S&P 500 has been performing. It's actually doing a little bit worse than S&P 500. However, there is a decent distribution of about 24 cents a share for XTTE. And if you look at the yearly performance, it's actually up 0.29%, and it pays about 24 cents of distribution per share. All right, looking at YMAG for the 5-day performance, it's down about 1.27%. If you look at the yearly performance, it's down 7.31%. And then if you look at how much yield it's been paying out, it's roughly about 18 cents. So with a little bit of a NAV depletion and an 18-cent distribution, I'll show you guys how I come up with the distribution numbers in a second here, but I just kind of want to talk through some of these funds first, and then we'll analyze the numbers. Yeah, so that's kind of the performance for the YMAG. I usually like to throw in an opinion in there if I'm going to invest in it or not. Personally, YMAG, it's not really on the radar. Last week it was good with its distribution on top of its erosion. But, you know, this is something I'm not actively looking to invest in. All right, now let's look at YMax. So for the last 5 days, it's down about 1.53%, as you guys can see. And let's look at the yearly distribution. And it's also down about 12.5%. Not necessarily the greatest performance, what we're looking for here, but let's look. But it's hard to complain about a weekly distribution that's about 21 cents a share. So I don't know, this is still one of those funds where I'm not really invested in. It's for me, like I'll pay more money for an expensive ETF like XTTE, one to keep the NAV erosion, and then have roughly the same kind of weekly distribution as YMAX or YMAG. All right, moving on to YieldC. YieldC is a lot of people's favorite. I personally am not necessarily a fan of it because of how bad the NAV depletion is. But let's look at the 5-day performance. 5-day performance, it's down 10%. Like, I just don't know how much more down it can go before the prospectus changes and this fund can actually maintain its NAV. So, but last week it's down almost 10%. If you look at the yearly performance, it's down 52%. However, the one saving grace for YieldC is its inception, it's been distributing about $1.06 per share. So that's pretty high, but at the same time, you really are trading the asset value for income. Hopefully you're not reinvesting it and you're pulling that money out, because I don't know. If you look at the trajectory, it doesn't look to be slowing down anytime soon. They changed the prospectus October 16th. It's been about a week. And in that week, it's also went down 10%. So that's kind of a red flag, guys. Just throwing that out there. We're all adults here. We all can make our own decisions. But I personally don't like YieldMax. However, I actually did buy 1,000 shares of them at X dividend date so that I could have done a profit hit and run. It's not playing out because the NAV just keeps going down and there was no pop up, no sell. But if I do have to hold on to it for one distribution, I'm not really going to complain about it, but I do not plan on reinvesting any of the money back into YieldMax because you're going to be investing money into a sinking ship. And why would you do that? Like, sure, you can get shares at a cheaper price. You get more shares, you get more premium. That's great. However, how much money are you willing to throw away to get that premium? So, I mean, choices and trade-offs, but personally, long term, I don't want to invest into this until I see some sort of like recovery or trend upwards. Because if you look at YieldMax, it's down 52.25%. And then if you look at SPY for last year, it's up 37.23%. So what's a smarter investment? Throwing in SPY, but YieldMax does have the premium. So I don't know. It's one of those hard decisions. All right, moving on to YQQQ. So let's look at the weekly. So in the last week, it's actually up 0.78%, which is great. And then let's look at the yearly performance. It's, a NAV erosion of about 5%. So not necessarily too bad. So, but let's talk about the distribution for YQQQ. So the distribution for YQQQ is about 39 cents, which between the NAV erosion and the distribution, not necessarily anything to write home about, but it is a little bit consistent. But just quick analysis, not investing this, don't really see a point right now. However, whenever I make a recommendation or opinion, doesn't mean I won't change my mind if metrics change, right? But let's look at Amzy. So Amzy is one of my favorites for a couple of reasons, but let's first talk about the weekly. So in the week, it's almost down 1%. Also because it's probably pulling the money out of Amzy to pay the distribution. But last week it's down about 1%. But if you look at the yearly performance, it's only down 0.05%. So almost NAV erosion. Obviously, it depends on when you actually bought the fund. Personally, for me, I bought the fund sometime in May and June, so it's about $22 a share. But minus like one of these major dips because that long-term outlook for Amazon itself wasn't too great. Some of the investors tanked the stock a little bit, but for the most part, as long as there isn't some like exciting news or bad guidance, Amzy pretty much is in a chop, which is what we're looking for. So the price doesn't fluctuate too much, and then you get a somewhat decent distribution per month. So for Amzy, the average distribution per month since its inception is about 65 cents. All right, so that's pretty much exactly what we're looking for. Yeah, 65 cents isn't something sexy like YieldMax where you're getting $1. However, for how much money I'm not losing from the NAV depletion, NAV erosion, and I'm getting 65 cents a share, that's a pretty reliable, consistent event, which is exactly what I'm looking for. All right, now let's look at Square or SQY, right? So this fund really wasn't on my radar initially. But now that I'm doing these videos more often, I'm actually like looking at these funds, looking at performance metrics. It's definitely something that I'm quite interested in. But let's dive into the numbers. So last 5 days, it's down 2.21%, right? Not great, but not terrible. Look at the yearly performance. Since its inception, it's only down 3.93%. And let's talk about the monthly distribution. And since this fund's inception, it's actually been averaging about 97 cents a share, which is quite impressive, right? So yeah, the NAV it's there, but it's not significant enough. And to have like a 97-cent distribution per month, this is something I'm definitely looking into maybe investing in or running like a quick profit hit and run. I'm glad I'm looking at this. Yeah, but we'll see. I'm definitely going to track the performance of this a little bit more, but yeah, this is exactly what I'm looking for. NAV erosion, not too bad. High premium at 97 cents a share. That's solid for me, right? All right, now let's talk about the final fund that kind of caught my interest. All right, and guys, if I haven't talked about a fund in the specific Group D, it's because I have absolutely zero interest in investing in it. and it was so bad that it wasn't even worth calling out. So like Disney, and then I think, what was the other one? Yeah, like AI, YY. Let's talk about this new fund, smcy. Inception, it's up 8.24%, which is great. Hasn't been out for a while. It started September 12th. So we really don't have much data, but the fact that, it's already up 8%, and we had that massive distribution of almost $5 a share. This is something I'm definitely going to be looking into. Currently, will I invest in it right now? No, I definitely want a little bit, like a few more months of data to see how this fund performs over time, right? I don't want to just invest in it blind and hope it's going to go up after some great numbers, great initial numbers. But yeah, I'm going to go to my Excel spreadsheet to talk about how I came up with the actual average yields. So this is how I came up with the different monthly and weekly numbers for these distributions. So for SQY, I went to the YieldMax site and just took all of their distributions and put them into Excel spreadsheet and then ran an average against them. So for SQY, we had 97 cents. This is all the different distributions for SQY since inception. SMCI, its first distribution was this month, and it was at $5.45, which is just absolutely wild. Definitely looking into it. But Amzy, typical consistency, the average yield is about 65 cents. And before I kind of talk about all of these, I hate it. I just want to throw this out there. I hate it when YouTubers always base their data on the last paid distribution. I don't like that at all. Why wouldn't you use the average versus the last dividend paid? It makes no sense for me to like prop and talk up numbers. I definitely like to look at the metrics and data with an unbiased opinion of the fund. Yeah, that's just kind of my 3 cents right there. All right, but for YQQQ, there's only a handful of distributions. There's actually only 2 of them, average about 39 cents. For YieldT, since its inception, averaged about $1.06. YMax. So YMax has had more distributions than this, but I took this numbers when the weekly distribution started, right? So that we can get an average of how much this pays weekly, right? So the average weekly payment for YMax is about 21 cents. If we look at YMag, the average weekly payment is about 18 cents. All right, now let's look at XTTE, qdte, and rdte, right? So some of this averages bleed over to the bottom of the page, so I'm just going to scroll down. All right, so for XTTE, the average premium is about 24 cents per week. The qdte average weekly payment is about 31 cents. And then for the rdte, the average payment is about 32 cents. So guys, I wanted to add this in here on top of looking at the different graphs on Yahoo Finance, because when you invest in these funds, you're supposed to look at the holistic picture. Don't just look at yield. Don't just look at NAV erosion. And that's what we're looking for. I'm just trying to give you some of the data to make a good decision. I threw out some opinions there, not trying to talk down anybody's ideas. However, everyone has a different risk threshold. For me, I do care about making a monthly premium, but at the same time, because I am doing a very risky strategy of just none of this money I am investing in is my own money, I want to maximize the success of not losing money and then I have to pay debt on it. So that's kind of like my thought process. If you're investing in your money and you're totally cool with just having the NAV erosion but getting a thick monthly payment, by all means, keep investing, right? But those are just kind of my couple of metrics I look at: the average yield or the average distribution payment, either weekly or monthly, and then to see the performance of the fund itself. All right, so let's discuss the Amzy payment for this specific month. So for October, the Amzy payment I'm going to receive is about $895.11. A little bit upset about this specific distribution because it's been about 2 months since we received any money, and the distribution per share is only 76 cents a share. Not too stoked about that, but it is what it is. It's still about, almost $900. So what am I complaining about with pretty much zero effort on my part? All right, now let's look at the individual performance of Amzy over the last 5 months of this project. So initially, when I first started the project, my first distribution payments were about $1,000 with the amount of shares I had for Amzy. And it looks like throughout time, the distribution per share kind of dwindled a little bit down to its natural resting point of 65 cents a share. This $1,050 payment was when the distribution was almost like 90 cents a share, almost $1. And then the rest here, after that $1,000 payment, it's like 860, 541, 760, and then what I've just received, or I'm going to receive on Friday this week, is about almost $900. So, you know, slowly, like a little regression, but slowly heading back up. Yeah, that's really all I have to say about that. All right, I wanted to talk about one last thing before I wrap up this video. I'm just going to talk about my XTTE distribution. Nothing too exciting to write home about, as I usually say, for my XTTE portfolio, but I made $9.13. I currently have about $1,900 waiting to be deployed into this specific ETF, but I'm kind of waiting on the market. I think it's a little bit too hot. I'm just waiting for a little bit of like a pullback before I invest money. But I definitely think this graph is kind of cool, and it's really what I'm looking for here. But let's scroll down to this other graph, and it just tracks the individual performance of XTTE, JEP, and JEPQ. JEP and JEPQ are monthly payers, so it doesn't really apply here, but I just wanted to kind of condense some of my information. But yeah, XTTE, it's slowly, the performance is going up. The yield is staying relatively the same, about 24 cents a share. So it's kind of nice to see an upward trend in more money as compared to my YieldMax stuff, where it seems to kind of regress a little bit. All right, guys, let's wrap up this video. We talked about the YieldMax Group D pairs, how much I specifically made in the month of October for that Group D. Talked about the YieldMax and the Roundhill weekly pairs. Talked about my weekly distribution for XTTE of a whopping $9. And then we talked about some of the analysis of how I choose some of these YieldMax ETFs I plan on investing in, or just some that are kind of on my radar, so I can either hop in and hop out for a quick like profit hit and run. All right, guys, before I let you go, there's one other thing I want to talk about. My brother has a YouTube channel about finance, kind of the same idea of what I'm doing, but just on a different methodology. I personally use a lot of debt to achieve this specific goals for the project, while my brother, he actually was able to make enough money between trading and investing and saving to get about an account of $200,000 of his own money. And then he's running like covered calls, investing in YieldMax funds and things of that nature. So definitely worth the view if you haven't looked into it already. But yeah, guys, hope you guys enjoyed the video. Hope to see you guys again, and then enjoy your journey. Have fun out there.